Is it audible? I am audible and visible. Yes, you are audible and visible too. Okay, good. So now we will start with one topic, that is the basic concept. Now what is the basic concept in income tax? So all people just pay attention. Now there is a volume 1 is given to you. If you have book today, then it's okay. If you don't have the book today, then also it is okay. No problem at all. Okay, you have to pay attention here. So guys, we are going to start with the first part of first topic, that is basic concept and tax rate for the assessment year 22-23. Now what is the meaning of assessment year, person, assessee? We will discuss today. So first part, that income tax is most significant direct tax. Entry number 82 of the union list, that is list 1 in the 7th schedule of article 246. So in article 246 there is a 7th schedule, and in 7th schedule there is a union list entry number 82, and 82 says that of the Constitution of India has given the power to the Parliament to make the law on taxes on income other than the agriculture income. Means other than agriculture income, our central government can charge the tax on income. But guys, on agriculture income, that power is with the state government, and there is an entry number 46 in the state list. So here you can write, if you have the book, then you can just write that entry number 46 of state list give power to state government to make laws on taxes on agriculture income. Taxes on agriculture income. So just write that entry number 46 of state list give power to state government to make laws on the taxes on agriculture income. So on agriculture income, if any state government wants to charge the tax, they can make the law. Now next part, we are going to start with the source of income tax law. Sir, what is the source of income tax law? Here I am saying law. So law means your act, your rules, your finance act, after that your notification, circular, case laws, everything that combined study will be known as the income tax law. So all people just pay attention. So in income tax law, there is a one captain, and that captain is a Virat Kohli, and that captain is known as the Income Tax Act. That is the main act. Now what happened? Just pay attention. Like 6-7 months ago, one student, he just came to me, and he just asked that, sir, I want to teach income tax for the CA intermediate student. I asked one simple question to him. Okay, just tell me what is the depreciation rate on computer and laptop. What is the depreciation rate on computer and laptop? He replied that, okay, sir, on computer and laptop, now depreciation rate is 40%. Earlier it was 60%, but now it is 40%. So just I asked that where it is written. He replied that it is written in section 32 of the Income Tax Act. So just I given him the Income Tax Act. Just I hand over Income Tax Act. There is a one pocket Income Tax Act with me. I just hand over him and just ask him to just show me where it is written like 40% depreciation rate in like income tax. So just he checked that Income Tax Act for 5-6 minutes, 10 minutes approx, and after that he replies, sir, I could not find that rate of 40% on depreciation rate on computer and laptop. Then I just replied to him that that rate is not given in the act. So basically in act, main provision is given. In section 32 they mention that okay, depreciation is available on the building as well as the furniture, as well as the intangible asset and plant and machinery at the prescribed rate, and that rate is prescribed in the income tax rules. So rules are always supportive to the act. So whatever provision written in the law or act, I can say that for support that provision, they always make the rules. In simple words, section 139(1) says that company, partnership, firm, and if your income is more than basic exemption, you have to file the return in the prescribed form. Now that form is prescribed in the rule. So ITR 1, 2, 3, 4, that ITR is given in the rules. So rules is supportive to the Income Tax Act. So just pay attention. First is Income Tax Act 1961. So Income Tax Act is a main source of income tax law. That is the Virat Kohli of Indian cricket team. It provides determination of total income, means how to calculate total income, tax liability, procedure of assessment, and it extends to whole of India including Jammu and Kashmir. Income tax is applicable to Jammu and Kashmir also. It came into force on the 1st April 1962. Basically, it is known as Income Tax Act 1961, but it is effective from 1st April 1962 because always income tax is charged in assessment year. Always income tax is charged in assessment year. So previous year was like 61-62, but assessment year was 62-63. So it is applicable from assessment year 62-63. So we will discuss about that. Normally income tax, whenever we talk in income tax, we always consider the assessment year. Assessment year means next year. Whatever income earned in previous year, you have to pay tax in the assessment year. So income tax, this particular act is applicable for previous year 61-62 and assessment year 62-63. So it is came into force from 1st April 1962, means assessment year 62-63. Now next part, it contains section 1 to 298. So basically there are 298 sections, that is section 1 to 298. Sir, there is only 298 section in income tax? Answer is no. There will be more than 500 section, approx 500 section. How? Because guys, here 1 to 298 is a number, but if you check one section, that is section 35 itself. So there is one section 35. After that there is a section 35D also, 35DD or D also, 35DD A also, after that 35AD also, after that there is a 35CCC also, 35CCD also. So in 35 itself there are this much sections. So obviously in income tax I can say that there will be approx 500 section. There will be approx 500 section in the income tax act. So in income tax act there is section number 1 to 298, but there are various sections like section 35, 35D, DD, means there are various sections. So there will be more than 500 section in income tax act. And it divided in schedule 1 to schedule number 14. It undergo a change every year by the annual finance act passed by the parliament and other legislation like the taxation law amendment act. So sir, how income tax act will change? Because you know that we need the changes. Every year there will be amendment. So how amendment will be made in income tax act? So amendment, there are two ways. One is your basically like finance act. Every year there will be a finance act. First, our finance minister will present a finance bill in the parliament, and whenever on that bill will be passed in the parliament, lower house, upper house, after that president will give the assent or president will sign the bill. On that day it will be treated as the act, that is finance act. Now guys, to make the amendment, there is one more point, like there is one more way, like they can make another act also. For an example, nowadays you know that there is a trend of ordinance. You heard about ordinance? Like in the COVID time, Nirmala Sitharaman ji came with one ordinance, that is Taxation and Other Law Relaxation and Amendment Ordinance 2020. Now question is that what is the ordinance? So ordinance means if parliament is not in working, or there is a leave in parliament. You know that many times there is a leave in parliament, that parliament is not in working. They are not, they are on the leave, parliament, all MPs are on the leave, parliament is not in working. In that time, our president has the power. Like president with the consultation of the ministry, president can come with the ordinance. So in COVID period, you know that there was one ordinance, that is Taxation and Other Law Amendment and Relaxation Ordinance 2020. Now they made the amendment in Income Tax Act through that ordinance. But guys, whenever there will be working of parliament, whenever parliament will reopen, that time they have to pass that ordinance in the lower house and upper house. Then it will be converted to the act, and now it is known as the Income Tax and Other Law Relaxation and Amendment Act 2020. So earlier it was ordinance and now it is the act. So it is very clear that when ordinance can be introduced, when amendment can be made through the ordinance, when parliament is not in working. If there is a parliament in working, directly they can come through the bill and after that act. But suppose if there is no parliament that time, in that case they can come with the ordinance, they can issue the ordinance, president can issue the ordinance, and after that they will pass that ordinance in the parliament, and that will be known as the law. So normally amendment in Income Tax Act, first is obviously every year there will be a Finance Act, and after that, suppose if that time parliament is not in working, then they can come with the ordinance, and after that, that ordinance will be converted to the act only after, whenever that parliament work will resume, whenever parliament will reopen, at that time they will pass that ordinance in the parliament, and that will be treated as the act. Now next part is the Income Tax Rules 1962. So rules are basically supportive to the act. Income Tax Act empowers Central Board of Direct Tax. There is a one CBDT, one board, and that board is like empowered by the Income Tax Act to make the rules. All forms like ITR form, procedure, principle of valuation of perquisites are provided in the rules. Now next is the Finance Act, or I can say that the Finance Act or Finance Act. Many times we call it Finance or Finance, whatever. So Finance Act. Now what is the Finance Act? You know that every year government, every year our finance minister present one bill in the parliament that is called finance bill. That is a part of budget. Every year budget, like the finance minister present the budget, and in budget there is a one part is called finance bill. Now in the Congress era, in Congress time, they always present the finance bill or budget on the last day of the Feb. Last day of the Feb is the 28 or 29 Feb. So P. Chidambaram and Pranab Mukherjee used to present the bill or budget on the 28 Feb. But when BJP came into the power, so they changed that date from 28, that is last date, to the 1st Feb. Now they present the bill or budget on the 1st Feb of every year. Now why they made the change? There is a one reason. Reason is that mostly whatever amendment made in the budget, that is applicable from 1st April. Means whatever amendment made in the budget, that is applicable from 1st April. But what happened? Suppose they presented budget on the last day of the Feb. Many times, what is the procedure? First they will present the budget in the Lok Sabha, Rajya Sabha, upper house, lower house. After that, what will happen? You know that after that there will be a discussion session on that bill, and after discussion session there will be passed by the upper house, lower house. After that, that will be sent to the president, and president will sign, and it will become the act. So it will take the 40-50 days time. So many times what happened, that finance bill is signed by president in the month of the April end or in May end and all. So there may be some problem with the amendments also, when this amendment will be applicable and all. So here in BJP era, they changed the date, and now they present the budget on the 1st Feb of the every year. Every year on the 1st Feb, they will present the budget or finance bill. So till 31st March, at least it will be signed by the president and it will be converted to the act. You got my point or not? Yes. Now one more thing. Guys, whenever there is an election year, there will be always two budget, or I can say that two finance bill. One is on the 1st Feb of the year, and one is after result of the election. So in the 2019 was election year. So in 2019, two budget was presented by BJP government, one before election on the 1st Feb 2019. That time our finance minister was Piyush Goyal ji. So Piyush Goyal ji presented the first budget, or it is known as the interim budget also. People call it interim budget. And one is the final budget after became the, after new government form in the month of the May. So in July, they presented the final budget, or I can say that the second Finance Act. So in 2019, there are two Finance Act. One is the Finance Act number 1 2019, and one is the Finance Act number 2 2019. So in election year, always there will be two budget or two Finance Act, and otherwise normally there will be a one Finance Act, and it will be presented by the finance bill will be presented by the finance minister on the 1st Feb of every year. So all people just pay attention. Presenting the bill, Finance Act, how Finance Act work. Presenting the bill. First part is a presenting the bill. Every year, finance minister present a finance bill in the parliament, which contains various amendments proposed to be made in the direct and indirect taxes. Finance Bill 2021 presented by Nirmala Sitharaman on the 1st Feb 2021. So here Finance Bill 2021 presented by Nirmala ji on the 1st Feb 2021. Now second is approval and assent of the bill. As soon as bill passed by both the houses of parliament and thereafter received the assent of president, it becomes the Finance Act. Finance Bill 2021 became the Finance Act on 28 March 2021. So till 28 means till 31st March, they that bill became the Act after receive the assent of President. Now amendment. So normally the amendment proposed therein are then incorporated in the Income Tax Act, and the Finance Act brings the amendment of the direct tax law, and it's provide the tax rates also. So in Finance Act, they provide the tax rate as well as the amendment. Now guys, In Finance Act, if you check the Finance Act, so in Finance Act there are two schedules. That is a one schedule number 1. So there may be a various schedule, but in the first schedule of the Finance Act contain the 4 part which specify the tax rate. First schedule contain the 4 part which specify the tax rate, and here first part will be the tax rate applicable for current assessment year. Current assessment year means, I can take one example. Suppose if you check the Finance Act 2021, then first part of schedule 1 explain the tax rate applicable for assessment year 21-22. Assessment year 21-22 means previous year 2021. That is the current year tax rate. That is the part 1. And your part 2 and part 3, it will mention about the assessment year, means next year tax rate, means that is mainly applicable for your like office and all. So part 1, in simple word I can say that current assessment year tax rate, or in simple word I can say that last previous year tax rate, that is given in part 1. And part 2 is for the TDS purpose, means at what rate you have to deduct the TDS in the previous year, or like for the salary employee you have to deduct the TDS at how slab rate, what slab rate will work and all. So that is the part 2 and part 3 that is relevant. That is tax rate for the assessment year 20-23. And in the part 4, like in part 4, that they mention that how to calculate the net agriculture income. Now question is that, sir, net agriculture income, there is no tax on agriculture income, then why we are calculating agriculture income? Guys, you know that in your IPCC you have studied one concept that is called partial integration, and in partial integration first you have to add your net agriculture income to your net taxable income and calculate the tax, and after that you have to reduce that basic exemption plus net agriculture tax, net agriculture income and tax on that you have to reduce. There is some partial integration, there is some indirect tax on the agriculture income. So how to calculate net agriculture income, that is mentioned in part 4. So there are 4 parts in the schedule 1 of every Finance Act. Today you have to check the Finance Act 2021, you will check the part 1, and in part, like in the schedule 1 there is a part 1 that is the last year tax rate. Part 2, that is the next year tax rate, basically at what rate you have to deduct the TDS and all. So just pay attention. Part 1 of the first schedule of the Finance Act specify the rate of tax applicable to current assessment year. Current assessment year means now this current assessment year is for last previous year, means current assessment year is 21-22, so tax rate for 21-22, last year tax rate. Now part 2 specify the rate at which the tax is deductible at source for the current financial year, means in current year at what rate we should deduct the TDS. So ultimately this will be the tax rate for our assessment year. Part 3 gives the rates of calculating income tax for deducting tax from income chargeable under the head salary and computation of advance tax. At what rate you have to calculate tax and pay the advance tax, as well as at what rate you have to deduct the TDS on your salary income and all. So ultimately this will be the relevant tax rate. So always rate given in part 2 and 3, that is the relevant tax rate for our assessment year. And part 4 contain the rules for computing the net agriculture income. Now next part, circular and notification issued by Cbdt. My question to all of you, what is the difference between circular and notification? Circular and notification. Okay, sir, this is circular and this is notification. Difference between circular and notification, just tell me. Circular and notification. Sneha replied that circular is not binding on assessee, but notification is binding to assessee. Any other? Circular provide the clarification, whereas notification provide the updates. that is Tushar. Circular are issued for clarification, whereas the notification to notify the changes, etc., etc. Okay. I think everyone given the correct answer. Circular is clarification, whereas notification is amendment of the provision. Okay. We'll explain you, don't worry. One is the circular and one is the notification. Circular are normally issued by the Cbdt. And if they want to clarify anything, if they want to clarify something, then they always issue the circular. So circular is clarify something if there is any doubt or dispute. To clarify that particular doubt, they always come with the circular. I can take one example. You know that nowadays there is one new TDS section. That TDS section is 194Q. Everyone is confused about 194Q. As well as in the TCS there is a one section that is the 206C1H. So everyone is confused in both the section. Like purchaser will deduct that, purchaser will deduct the TDS or seller will collect the TDS. So there is some disputes about this particular section. So clarify this particular section. Government came with the Cbdt came with one circular. So circular is a clarificatory in the nature. Clarification. They want to give the clarification. That is called circular. Now guys, circular are binding to the department. Means department have to follow the circular because they issued the circular. But circular are not binding to the assessee as well as the courts and all. But if any circular is beneficial for you, then you can opt that, no problem at all. If any circular is beneficial for you, then you can opt that. But if any circular is not beneficial to you, you can just ignore that, no problem at all. Means that is not binding to assessee, it is binding to the department. I can take one example. Suppose in your office, you prepared one invoice and you send that invoice to the client. Suppose professional fees was 1 lakh rupees. Now on this 1 lakh you charge the GST and GST 18,000 rupees. So total comes to 1,18,000. Now on this 1,18,000 your client made the payment and client deducted the TDS. Now here client will deduct the TDS on 1,18,000 or only 1 lakh. Right answer is only 1 lakh. Means client will deduct the TDS of 10,000 rupees. And remaining that 1,08,000 he will make the payment to your boss or your office. Now he has not deduct the TDS on the your GST component. Why it is? Because there is a one circular of the Cbdt. And Cbdt clarify that, Cbdt circular says that if there is a GST component on service, then there is no need to deduct TDS on that GST component. So he has not deducted because there is this one circular and that circular is beneficial to the assessee. But suppose by mistakenly what happens? Suppose he deducted TDS on total 1,18,000. It will work or not? Answer is yes, no problem at all. It will work. Many times in our office, TDS is deducted on total amount. So it will work, no problem at all. But guys, if you not deduct the TDS on this GST component, then also it is okay because it is a circular. It is not binding to assessee. It is beneficial to assessee. Assessee can opt that. But if it is not beneficial to assessee, assessee may ignore the circular. You got my point or not? Yes. Now there is a one more point. That is notification. Notification, whenever if they want to notify something, because what happened in the law, in act many times they mention that suppose that Krishi Kalyan cess is applicable from the date on which it is notified. So notify means if amendment through notification they can impose the amendment. So notification is applicable or binding to both assessee as well as the department. Means you cannot say that no, we will not follow the notification. Nowadays ICI also issuing various notification and all. So this type of notification, suppose ICI issue one notification, your exam will be in the month of May from 2/4 date is given, suppose 2/4/6/8 and all. Now you will not say no, I will not follow that. I will give exam on my date. No, you have to follow that. That is called your notification. So notification is issued by central government or Cbdt to notify something, to impose the amendment, or I can say that activate the amendment. That is called your notification. So just pay attention. Circular are issued by the Cbdt to clarify the meaning and scope of certain provision contained in the act. The notification are issued by central government or CBDT to give effect of the provision of the act. Circular are binding to assessing officer, or I can say department, not on the assessee and court. However, assessee can take the advantage of the circular which are beneficial to them. So if any circular are beneficial to assessee, then assessee can take the advantage of that particular circular. Now next part is a Supreme Court and High Court judgment. Guys, you know that everything, it is not possible that everything should be written in the act. Obviously, it is not possible. And due to that, there may be various disputes. And that dispute matter always, they will, like you refer to the court. So High Court and Supreme Court. That you have to study the High Court and Supreme Court judgment. Now guys, Supreme Court judgment is land of law. Supreme Court judgment is just like a law. If there is a Supreme Court judgment, you have to follow that. That is land of law. It is binding to whole India. If any judgment of Supreme Court, it is binding to whole of India, like it is binding to you also, to me also. I am staying in Maharashtra, you are staying in Kerala or Tamil Nadu, then also it is applicable to all of us. That is Supreme Court judgment. But guys, if there is a High Court judgment, then High Court judgment is applicable only to that jurisdictional area. That jurisdictional state, that is applicable only to that jurisdictional state. I can take an example. Suppose if there is any judgment of Kerala High Court, so that is applicable only to the people of Kerala. Suppose if there is a judgment of Tamil Nadu like High Court, that Madras High Court, then it is applicable to Tamil Nadu only. If there is a judgment of Bombay High Court, it is applicable to only Maharashtra. That is, High Court judgment is applicable to that particular jurisdiction only. But if there is a Supreme Court judgment, that is applicable to whole India. Now sir, there may be one question, okay, sir, there can be a contradictory judgment or not? Miss Madras High Court is saying something different. Bombay High Court is saying something different. Punjab Haryana High Court is saying something different on same issue. Is it possible or not? Answer is yes, it is possible. And there are various judgment, you know that there are various case laws in that one High Court is saying something different and another High Court is saying something different. But obviously that type of matter will be referred to the Supreme Court, and after that whatever Supreme Court judgment, that Supreme Court judgment will be the law of land. Supreme Court judgment is binding to whole India. So just check that here it is written. Various issues which are arise out of the provision of act are decided by High Court and Supreme Court. The Supreme Court is the apex court, means highest court of the country, and law laid down by the Supreme Court is the law of the land. Means whatever decision given by Supreme Court, you have to follow that. The decision given by the various High Court will apply in the respective state in which such High Court have the jurisdiction. Now question is that, sir, you are saying that Supreme Court judgment is law of land. Means whatever, like you know that judgment given by Supreme Court, that is applicable to whole India. Can government override Supreme Court judgment or not? Can government, our government, override Supreme Court judgment or not? Answer is yes, government can override Supreme Court judgment. If government change in the law, means Supreme Court judgment is law of land. This is the law of land. But if government change the law itself, in that case, Supreme Court judgment can also be override. Means government has the power, parliament may pass the law, and through that particular law, they can override the Supreme Court judgment also. I can take one example, one very interesting example. Just I want to explain you how that Supreme Court judgment can also be override by our government. Just we are taking one example, and that is very famous example, very interesting example. You heard about Vodafone? Yeah, very good question. Sonia is asking that, sir, when High Court judgment is applicable only to that state, then why we are quoting case law? See, if that case law, if you are located in that particular state, in that case, that assessing officer will not disallow your expenses. Suppose for an example, you are staying in the Tamil Nadu, and assessing officer disallowed your expenditure, and on that same issue, Bombay High Court is saying that that expenditure should be allowed. So here Tamil Nadu, like in Mumbai, I am located in Mumbai. Mumbai AO will never be disallowed that expenditure because Mumbai High Court judgment is binding to him also. and you are located in Tamil Nadu, and Tamil Nadu there is no judgment, then suppose if he disallowed the expenditure, so while filing the appeal to the authority, CIT appeal or ITET, then obviously you will mention the ground, na? On what ground you are saying that expenditure should be allowed, then you will mention that sir, Bombay High Court is saying that expenditure should be allowed. Suppose sir, Gujarat High Court is saying that expenditure should be allowed, but suppose there is one more High Court, Punjab Haryana High Court, they are saying that expenditure should not be allowed, then you will not quote that case law. You are not going to quote that case law, you will quote the case law whichever is in your favor. So High Court judgment, obviously that is not binding to you, but whenever you are making appeal, then obviously you will argue on that point. Na sir, this High Court, that particular High Court is saying that this expenditure should be allowed, so it should be allowed in our case also. So that's why, that's the reason. Okay, there is one very famous judgment, just we are going to discuss today, very little part of that particular judgment. You heard about Vodafone? Yes sir, we heard about Vodafone. You know that before Vodafone, there was one company, name is a Hutch. In India, like Hutch network was amazing. If you are having the Hutch SIM card, then you are like, different from other people. Other people is having BSNL and we are having Hutch. So Hutch network is very like fantastic network earlier in 2000, like 12, 13, 14, 11, like that was amazing network Hutch was having. So in India, what happened? There was one company, name was Hutch SR Limited. So in India, one company name was Hutch SR Limited. Now what happened? This Hutch SR Limited, that Indian company, is having one holding company, and that holding company was located in Mauritius, and that company name was CGP Limited, and that CGP Limited was located in Mauritius. Mauritius is a foreign country. So in Mauritius, CGP was located, but that CGP was holding company. Means here Hutch SR approx 67% share was held by the CGP Mauritius based company. Now that CGP is a subsidiary company of one company, that is Hutchison Hong Kong. There was one company, name was Hutchison International Hong Kong. There is a one Hong Kong based company, and CGP is a subsidiary of Hutchison Hong Kong company. So in simple word, I can say that here CGP is a holding company or Hutch SR India, and Hutchison International Hong Kong is a holding company of CGP Limited, 100% holding company. Now what happened? So here in this particular example, till now there are three companies. One is the Hutch SR India, one is the CGP Mauritius, and one is the Hutchison International Hong Kong. So there are three companies. Out of three companies, this two companies, CGP Mauritius and Hutchison Hong Kong, both are foreign company, and this Hutch SR Limited is an Indian company. Now what happened? Just pay attention. Here this Hutchison Hong Kong Limited wants to sell Indian company, that is Hutch SR Limited. So they asked for bid. So various purchaser came to the Hutchison Hong Kong and they want to purchase like Indian business or Indian company. So what happened? There was one company, name is a Vodafone. Now this Vodafone International Limited is located in the Netherlands. Vodafone is located in the Netherlands. Now suppose for an example, here Vodafone is interested in purchasing Indian business, that Hutch SR business. So how they purchase? Suppose for an example, suppose CGP is a holding company of Hutch SR Limited. If CGP transfer that Hutch SR Limited shares to the Vodafone International, then Indian company shares are transferred. Then Indian companies share are transfer, and if any Indian company shares are transferred, there is a one section 9, and section 9 says that Indian company shares are transferred, then it is treated as transfer. Capital gain is applicable in India if you transfer the Indian company share, because Indian company share is an Indian asset. It is located in India and you have to pay the tax in India. So suppose for an example, if CGP transfer the share of the Hutch SR Limited Indian company to Vodafone International, then yes, CGP is required to pay tax in India because they are transferring or selling the Indian company share. But they plan in a different way. How they plan? You know that. Here they transfer the shares, means Hutchison International Hong Kong, this company transfer the shares of the CGP Mauritius shares transferred to the Vodafone International. Here one foreign company, that is Hong Kong based company, they are transferring shares of the Mauritius based company to the Netherlands based company. So one Hong Kong based company transferring shares of the Mauritius based company to the Netherlands based company, and Indian company share, earlier it was with the CGP and now also it is with the CGP only. Means CGP earlier was a holding company of the Hutch SR, now also CGP is a holding company of the Hutch SR. Indian company shares are intact, Indian company shares are not transferred. So this transaction took place in India in approx like I think 7-8 that is 8-9 or something in that year. This particular transaction took place in India. Now what happened? One assessing officer from Mumbai, one person from Mumbai, one assessing officer from Mumbai, that person sent one notice to the Vodafone International Netherlands. He sent one notice to the Vodafone International Netherlands, and he asked to Vodafone that since you made the payment to Hutchison Hong Kong to acquire the shares of CGP, indirectly you purchase the Indian asset. And when you purchase the Indian asset, then in hands of seller, that capital gain should be taxable. So you are required to deduct the TDS. And you have not deducted the TDS. Since you have not deducted the TDS, then I am treating you as an assessee in default under section 201, and you have to pay the penalty and interest in India. Now what happened? Assessing officer from Mumbai, and that assessing officer sent one notice to the Vodafone Netherlands. That's why this case law is a Vodafone case law. Now there may be a one surprise for you. Okay, obviously tax should be paid to by the seller. If there is an income is always with the seller, and here seller was the Hutchison, here seller was the Hutchison International. So Hutchison International should pay the taxes. Why that case law is named as a Vodafone? Because here assessing officer sent one notice to the Vodafone International Limited, Netherlands. And he asked that since you have purchased the shares of CGP Mauritius from the Hutchison Hong Kong and you have not deducted the tax, you have not deducted the TDS, I am treating you as an assessee in default. And since you are assessee in default, if you suppose if there is a TDS liability, you have to deduct the TDS and all, and you have not deducted TDS, in that case he will treat you as an assessee in default, and you are required to pay the penalty and interest. Penalty amount will be the 100% of the tax amount. Means whatever TDS you have not deducted, just pay the 100% of that. You have to pay that much amount. That notice was sent by one assessing officer to the Vodafone. Now Vodafone challenged this issue in the Bombay High Court. And Vodafone challenged this particular issue in the Bombay High Court, and Vodafone argued that since this transaction is not taxable in India, then obviously we are not supposed to deduct the TDS. So we have not deducted the TDS. So we should not be treated as assessee in default. But Bombay High Court just analyzed this transaction. And Bombay High Court concluded that, and they given one judgment, and in that judgment they mentioned that ultimately here the CGP Limited Mauritius is a dummy company. You transfer through CGP share, you transferring the Indian business or Indian asset, it should be taxable in India, and here assessing officer is right to charge the penalty as well as interest. Means judgment was given in the favor of government or in the favor of department, and against the Vodafone that judgment was given by the High Court, Bombay High Court. Now that judgment challenged to the Supreme Court. And guys, in Supreme Court there were very famous lawyer from India. They fight that particular case in Supreme Court, including Harish Salve and all. So in Supreme Court, High Court judgment was in the favor of government, and they are saying that yes, there should be a tax. But guys, in Supreme Court, you know that in Supreme Court, Vodafone won that particular case. Vodafone, like that judgment, Supreme Court judgment was in the favor of the Vodafone, and Supreme Court says that since there is no provision in the income tax, that's why it should not be taxable in India, and there is no tax on that particular income in India. And when there is no tax to the Hutchison, means here Vodafone is not required to deduct the TDS, so it should not be treated as SSA in default. That was the judgment of the Supreme Court. Because Supreme Court analyzed the Section 9, and Section 9, that is income deemed to be accrued or arise in India, in that section they mention that if any asset, Indian asset is transferred or Indian company share is transferred, here Indian company share is not transferred, so obviously that should not be taxable in India. So Vodafone, like you know that they earlier they lost in Bombay High Court, but now they win that particular case. Now what happened? While like giving that particular judgment, like one advocate from Supreme Court, one advocate in the Supreme Court from government side, he just asked to the judge of the Supreme Court, okay, sir, you are saying that it should not be taxable in India, but there is a heavy loss to the India, tax loss to the India, because every company will do the same thing. They will create one dummy company in the Mauritius, and they will transfer the Mauritius company share. So every company will do that type of planning. So you know that what Supreme Court judge replied. Like in Supreme Court, one advocate from government side, he asked that particular question to the judge, and judge replied that, okay, we are here in Supreme Court to analyze the law, not to make the law. We are here in Supreme Court to analyze the law. Whatever written in the law, we are just analyzing that. We are not here to make the law. If you think that okay, it should be taxed in India, then you should change the law. So what happened? You know that in 2012, they made the amendment. In 2012, they made the amendment, and in 2012, our finance minister was Pranab Mukherjee. Pranab Mukherjee was the finance minister, and Pranab Mukherjee changed the law, and he changed the law retrospectively from 1961. He changed the law retrospectively from 1961, and from 1961 he changed the law, and in law he has written that now this transaction will be taxable. And how he changed the law? You know that he introduced one clause or like one explanation in Section 9. Section 9 that is deemed to be accrued or arise in India, and in that particular section he introduced one explanation. And in explanation he mentioned that if any foreign company derive its share value, means its share value derived from Indian asset, then that foreign company share will be deemed to be located in India. He just put it one explanation in Section 9. And in Section 9 he mentioned that if any foreign company derive its share value from Indian asset, now how it will derive and all, there are separate rules and all. We will discuss that in the later part. Don't worry about that. Whenever we will discuss about international taxation part, NR taxation, in that I will again discuss this particular case law. So here he introduced one explanation, and in that explanation he mentioned that if any foreign company derives its share value from Indian asset, then foreign company share will be treated as deemed to be located in India. And now if you transfer the foreign company share, then it will be taxable in India. Now it will be taxable in India. So guys, you know that Pranab Mukherjee made the amendment in 2012 with retrospective effect from 1961. So Supreme Court judgment is override. So in simple word, I can say that normally Supreme Court judgment is law of land. But if law is changed, then Supreme Court judgment is override. Today, by the law, Bombay High Court judgment is confirmed, and Supreme Court judgment is override by our parliament or by the law. You got my point or not? Yes. Now question is that, now sir, what is the scenario of this Vodafone case law? After that judgment, assessing officer sent again one notice, and he asked for the penalty and interest. So that is one international dispute, obviously, because that company is located in Netherlands and all. And after Supreme Court judgment, we on the international matter, we directly our government agree for that arbitration. So you know that case was in arbitration at Singapore, I think. So in Singapore, with Vodafone and our government, we are in the arbitration, and in arbitration I think judgment was in the favor of the Vodafone. Okay, there should not be tax, because in every time what you will do, okay, suppose if any person is doing that type of transaction, any foreign company is doing that type of transaction, that time law was not there, after some time you will make the amendment in the law, and that amendment is retrospective amendment from 1961. That was the intention of that law. That is not good now. So in arbitration, I think Vodafone won that particular case, but our finance ministry, Anurag, that one minister under Nirmala Sitharaman, so he said that no, we will again file the appeal, or revision petition, or I can say that the review petition against that judgment. So now that is not part of income tax. In income tax, it should be taxable. It is a retrospective amendment, but that is the international matter, because you know that if we charge that type of taxes on the any foreign companies and all, then foreign company will not invest in India. So we have to check that also. We have to check the international pressure, international law and all. That's why that was in the arbitration. Now what is the situation today? I don't know about that. Now question is that, sir, whatever amendment made by Pranab Mukherjee, that is right or wrong? There may be two views. One group of people will say that no, it is not right, because on the date on which that transaction took place, that day our law was different. They used the law, obviously they used the loophole of the law, and they made the transaction. Now if you make the retrospective amendment, that is not good. That is one group of people. But second group of people will say that, okay, why not? Obviously everyone know that it was clearly planning, it was for the tax evasion. They created the one dummy company in the Mauritius and all, so they should pay the taxes. That is the other set of people. So what, you are from which side? You can take any side, your choice, but I will go with the first side, because that should not be taxed, and obviously only due to the TDS not deducted, they are charging that much penalty and interest on the Vodafone. That's not good. So I am on the first side, because if we see the international level, then after that some foreign company will never be interested in India. Like company will never invest in the India if we do that type of practice and all. So whatever law at that time, if like Supreme Court is saying that it should not be taxable, then it should not be taxable. You should not make any retrospective amendment. There should be always a prospective amendment. That is my opinion. Your opinion may be different. Okay, so this is the completion of Supreme Court or High Court judgment. So what we have discussed till now, all people just pay attention. Source of income tax law. First is the Income Tax Act 1961. Second is the Income Tax Rules. Act is a main provision, that is all main provision comprised in the Income Tax Act. Rules is to support the law, that is any form and all that is given in the rules. After that, notification circular we have discussed, Finance Act we have discussed, and case laws we have discussed till now. Now next part is a definition of person. So sorry, that is section 4, that is charging section. Sir, when income tax, like when government will charge the income tax, means who is required to pay the income tax, that is the charging section. So in every law there is a charging section. In GST also there is a charging section. Okay, if you provide sell any goods or whatever, I don't know about that, like any sale or service or goods and all, then you have to pay the GST. So what is the charging section in income tax? So just pay attention. Charge of income tax. Section 4 is a charging section. This section says that income tax is charged for every assessment year. First part, income tax is charged for every assessment year. It is charged on every person, defined in section 2 clause 31, and it is charged on the total income earned during the previous year. Means income tax is charged in every assessment year. It is charged on every person, defined in section 2 clause 31, and it is charged on the income earned during the previous year, and the tax is levied at the rate prescribed by the Finance Act. The tax will be levied at the rate prescribed by the Finance Act. So we will discuss the certain terms. First part, sir, what is the assessment year? Second part, what is the meaning of the person? Third part, what is the meaning of the previous year? So first we are going to start with the assessment year. Guys, now what is the assessment in year and previous year? It's very simple. Previous year means year in which you earn the income. Year in which you earn the income, that is called your previous year. Today I am teaching to you. So I am earning income in the previous year 21-22. So 21-22 is my previous year, and assessment year will be the 22-23. Assessment year means year in which you will pay the tax, that is called your assessment year, or next year, that is called assessment year. So after previous year is a year in which you earn the income. Assessment year is a year in which you will pay the taxes, that is called your assessment year. Now guys, always remember that assessment year will be always of the 12-month period. Means my previous year is 21-22, assessment year 22-23, that will be period of 12 months, means 1st April 2022 till 31st March 2023. Assessment year will be always period of 12 months. But previous year can be less than 12 months also. Suppose I have started business, newly business I have started in the month of the August, 1st August. Then my previous year will be from 1st August 2021 till 31st March 2022. So previous year can be less than 12 months also, but assessment year will be always of the 12 month. You got my point or not? Yes. When previous year can be less than 12 months, if any new business is started, new profession is set up, or new source of income comes into the scenario. If new source of income you came into the power, in that case that previous year can be less than 12 months also. So just pay attention. First we are discussing about assessment year. Assessment year means a period of 12 months commencing on the first day of every year, means 1st April of every year, that is commencing on 1st April of every year. Income earned in previous year is taxed in assessment year. For your examination, assessment year 22-23 is a period of 12 months commencing from 1st April 2022 and ending on 31st March 2023. That is called your assessment year. Now what is the meaning of previous year? So previous year section 3, definition is given in section 3. Previous year means the financial year immediately preceding the assessment year, means financial year immediately preceding the assessment year, that is called your previous year. For assessment year 22-23, the previous year shall commence from 1st April 2021 till 31st March 2022, and the total income earned in previous year 21-22 is assessed in the assessment year 22-23. For your exam simple, previous year is 21-22, means whatever income we are earning today. So today, like your client or you or me or whatever income we are earning, that is previous year 21-22, assessment year will be 22-23. Now next part, provided that in a case of a business or profession newly set up or a source of income newly coming into existence, the financial year, the previous year shall be period beginning with the date of setting up of the business or profession, or as the case may be, date on which the source of income newly comes into the existence and ending with that financial year. So suppose your business started in the month of September, then your previous year will be from September to March, but assessment year will be April to March only, that is next 12 months. You got my point or not? Yes. Now next part. Income tax is required to be paid by the, income tax is charged on the person. Now what is the meaning of person? Here person means, so in income tax guys, there are total 7 person. First is any individual. Now question is that what is the meaning of individual? In GST also you have discussed some individual and all, like in IPCC also individual. Individual means a human being. A human being, male or female, both are the individual. So you are individual, I am also individual. Like my parents, my wife, everyone is an individual. So that is called individual. Now second is a HUF, Hindu Undivided Family. Now HUF is not defined in the Income Tax Act. In Income Tax Act, HUF not defined in the Income Tax Act. But to check the HUF, you have to check the law, that is Hindu law. If you check the Hindu law, so in Hindu law they have defined the HUF, and in Hindu law they are saying that suppose if any couple and they are having any child, suppose me, my wife and my child, then we can make the HUF. So HUF is basically a person, a separate entity. HUF income will be treated as the separate income and HUF is treated as a separate person. Now question is that, sir, who can create the HUF? All Hindu families can create the HUF, no problem at all. Sir, Jain can also create the HUF? Answer is yes. That Punjabi, Sikh, can they create the HUF? Answer is yes. So you can create, Hindu can create the HUF, Jain, Sikh can create the HUF. But guys, always remember that Muslim cannot form the HUF. Muslim or Catholic or Parsi, they cannot form the HUF because they are not treated as Hindu, but other people like Hindu, Jain and all, they can form a HUF. Now guys, in HUF, normally that is given in the Hindu law, not relevant for the income tax purpose. In HUF, there may be some people will be like co-partner and other people are treated as member. Now member and co-partner normally both are same. Member and co-partners normally both are same. But in the some cases, any person can be a member, but he cannot be treated as co-partner. Now question is that, what is the meaning of co-partners? Co-partner means if any person is entitled to get the share in the family property. If any person entitled to get the share in the family property, that person is called co-partner. Now, son as well as daughter. Before 2005, daughter was not eligible to get the family property, but in 2005 they made the changes. There was one judgment, and in 2005 they made one judgment, and now daughter are eligible for the equal share in the family property like a son. So suppose I can take an example, our HUF and my daughter and my son. So my daughter and my son both are the co-partner, both are eligible for our family property. But guys, my wife, suppose for an example, my wife is a member of my HUF, but my wife is not a co-partner. My wife is a member of my HUF, but my wife is not a co-partner. My wife is not a co-partner, but my wife is a co-partner in her father HUF property. So her father HUF property, so in simple word, it's a daughter and son. So daughter and son both are equal. They are the co-partner in their father HUF or their family property. They can take the share in that. You got my point or not? So that is related to Hindu law. There is no relevance for the income tax. Now guys, one more thing. In the HUF, there are two types of the school of law. One is called as the Deva Bhaga, and one is Daya Bhaga, and second is called as Mitaksha. Now what is the Daya Bhaga school of law and second is Mitaksha school of law? Daya Bhaga is applicable only to two states. One is the Assam and one is the West Bengal. So for Assam and West Bengal, Daya Bhaga school of law is applicable, and Daya Bhaga school of law is applicable to Assam and West Bengal, and second is Mitaksha. That Mitaksha school of law is applicable to rest of India. Now Mitaksha school of law says that whenever any child is born, means by birth, he is eligible for his family property. Means he has the right in family property by the birth. That is called your Mitaksha school of law. So in Mumbai or Chennai, Tamil Nadu, like Kerala and all, we follow the Mitaksha. If any child is born, then he has the right in their family property. That is called your Mitaksha school of law. And Daya Bhaga says that till that elder person is alive, child don't have any right in the property. After the death of that person, their child is having right in the property. Means right in property is not by birth. But in Mitaksha school of law, in our Maharashtra, Chennai and Kerala and all, we follow the Mitaksha, means by birth only that child is having a right in the property. So that is called your HUF. Now this discussion is not relevant for your examination. For examination, just you have to remember the HUF. Hindu Undivided family is a separate entity that is treated as a separate person, and they can take the slab rate ka benefit. Now question is that what is the benefit of HUF? Only benefit of HUF is to claim the benefit of 2,50,000. That slab rate benefit, that is only benefit of HUF. So sir, we should create the HUF or not? If you want to take the benefit of 2,50,000 basic exemption, you may create the HUF. Okay. Now guys, you know that instead of income tax, there will be one new law that is called Direct Tax Code. P. Chidambaram made the DTC in 2008 and all. But till now, DTC is not there. But suppose if DTC will replace income tax law, then in DTC there is no concept of HUF. They remove the HUF from the DTC. So in future, you know that after some time there will be no HUF concept. They remove the HUF from the DTC, Direct Tax Code. So all people, just pay attention. Person include individual, you, me, all individual. Hindu undivided family, a Hindu undivided family as per the Hindu law. Company means a body corporate, any company that is limited company, private company, government company, non-government company, that is called your company. Next is a firm, but firm always include LLP. Yeah? Always remember that. Firm always include LLP. LLP means limited liability partnership. Now question is that, sir, in income tax, is there is any difference between firm and LLP? Answer is no. In income tax, guys, all provision are similar for the firm and LLP. Both are same. We treat firm and LLP both at same level. There is one difference. That is section 44 AD and EDAY. You know that 6% or 8% presumptive taxation, or in case of the professional, there is a 50% presumptive income. In that presumptive taxation, that particular section 44 AD and EDAY, that is applicable to firm, but that is not applicable to LLP. That is one difference only. And there will be one more difference in the capital gain I will discuss with you. But otherwise, in income tax, we treat partnership firm and LLP both at same level. Same tax rate, everything is same. Now you may ask me one question. Sir, in LLP, that partner liability is limited because limited liability partnership means partner liability is limited. So in income tax also, is that partner liability is limited? In income tax also, is that partner liability is limited? Answer is na baba na. In income tax, there is a one section 167C that was introduced by P. Chidambaram. That time he was the finance minister. And P. Chidambaram ji mentioned that like notwithstanding anything contained in your Limited Liability Partnership Act, means what, notwithstanding anything mentioned in LLP Act 2008, means just that you have to ignore the LLP Act. In income tax, partner liability is unlimited. Even LLP partner liability is unlimited. So in simple word, I can say that in income tax, we treat LLP and partnership firm both at same level. There is no difference in that. Partner liability is unlimited in Income Tax Act. Now next part is the AOP and BOI, like association of person and body of individual. So question is that, what is the meaning of association of person and body of individual? Example is a joint venture. Suppose 2-3 persons came for particular task and they have not formed any company or partnership firm, then it will be treated as AOP or BOI. I can take one more example. Like in Mumbai, there is a Ganesh Chaturthi, is very like a famous festival in Mumbai. So for Ganesh Chaturthi, suppose we 10 friends came together, and in that particular 20 days, suppose we are going to conduct some program and we are going to sell the water bottle to the devotees and all. So we just form one mandal or one like a union, you can say that. And we have not registered as a company or partnership firm, then it will be known as the AOP BOI. Sir, what is the difference between AOP and BOI? AOP means in AOP, everyone can become the member in AOP. Suppose there is a one company A Limited, second company B Limited, third is only BB sir as an individual, third is BB, that is as an individual. Can we three form the AOP? Answer is yes, because it is association of person and person include everyone. But in body of individual, guys, always individual person can be a part of BOI. Only individual person. So we suppose we 50 people form one form body, that is called your body of individual. So differences in AOP, everyone can be a part, everyone can be a member, but in BOI only individual person can become the member. Now for AOP BOI, don't worry, there is a separate topic in volume 2. In volume 2, there is a separate topic, how to tax the AOP BOI income and all. We will discuss in that topic. So that time you will understand what is exactly AOP BOI, how people create the AOP BOI, what is the benefit of that, and how government are charging tax on the income of AOP BOI. What is the share of member, how share will be taxed in hands of member and all, is it will be exempt or taxable. Everything we will cover in the AOP BOI topic. Now next is a local authority. So local authority means, local authority is an authority which manages the public fund, I can say that. Whatever fund received from government, they manage the public fund for the welfare of public, that is called local authority. Example, Mumbai Municipal Corporation or Chennai Municipal Corporation, or suppose any like municipal corporation, Gram Panchayat and all, that is called local authority. And last is the artificial juridical person. Now, what is the meaning of artificial juridical person? If any person is not covered in this six people, any person is not covered in individual, HUF, company, firm, AOP, BOI and local authority, that person will be covered in the artificial juridical person. Example is your like temples and all. So in temples, Gurudwara and all, they will be treated as your god, that will be covered in the artificial juridical person. So all people just pay attention, there are 7 persons in the Income Tax Act. One is the individual, HUF, company, partnership firm, AOP, BOI, local authority and artificial juridical person. Now next definition is related to the assessee. Sir, what is the meaning of assessee? It's very simple. What is the meaning of assessee? So if any person required to pay any tax in income tax, or any charge, or any fees, or any sum in income tax, that person will be known as assessee. I can take one example. You and me both are person. You are covered as an individual, I am also individual. But suppose if any person required to pay any tax or any sum in Income Tax Act, that person will be known as the assessee. So I require to pay the tax, so I am assessee. But you are not required to pay any tax. You don't have any income more than 2,50,000. In that case, you are not required to pay any tax. So it means you are not an assessee. You are only person, but I am an assessee. But remember that in simple word, can I say that? In a simple word, can I say that every assessee is a person? Because assessee is a person. But every person is not an assessee. You are a person, but not an assessee. I am a person as well as the assessee. So every assessee is a person, but every person is not an assessee. You got my point or not? Yes. Now one more point. But that assessee include some like a deemed assessee also. First is, if any assessment proceeding is started, means you are not required to pay any tax and all in income tax, but suppose if any assessment proceeding is started related to your income or your losses or related to someone other income. For an example, I can take one example. There is some income of my son. Now my son not paid any taxes, I also not paid any taxes, but some assessing officer is making assessment. My son income has to be clubbed in my hand. So he is making assessment in my hand for the income of my son, means some other person income is assessable in my hand. In that case also I will be treated as assessee. So in simple word I can say that first assessee means any person who is required to pay tax or any amount or any sum in income tax, that is called assessee. Second, deemed assessee means if any person against whom any proceeding is initiated related to his income, his losses, or any other person losses, or if any refund is due. Suppose for an example, you are not required to pay any tax, your TDS is deducted and you just claim the refund. So in case of refund also, you will be treated as assessee. You got my point or not? Yes, all people just pay attention. What is the meaning of assessee? So definition is given in section 2, clause 7. It means any person who is liable to pay any tax or any other sum under Income Tax Act 1961, that person is known as assessee. Now next part, it includes every person in respect of whom any proceeding under the act has been taken for the assessment. Proceeding means any assessment proceeding is initiated related to his own income or income of any other person in respect of which he is assessable. It is related to clubbing, means my son income will be clubbed in my hand, and suppose assessment initiated assessment initiated for the assess the income of my son. In that case, I will be treated as assessee. Or the loss sustained by him or such other person, or the any amount of refund is due to him or such other person. In that case, that person will be treated as assessee. Now next part. Every person who is deemed to be assessee under provision of the act. Suppose in Income Tax Act, if anywhere it is written that person is a deemed assessee, in that case he will be treated as assessee. Like for the trust, trustee is a representative assessee. Like for the trust, trustee are the representative assessee. So here trustee are representative assessee, or I can say that the deemed assessee. So every person who is deemed to be assessee under the provision of the act, for example, trustee of a trust are representative assessee. Now next part. Every person who is deemed to be assessee in default under any provision of law. If any person is deemed to be assessee in default means when person can be treated as assessee in default, there are various scenarios where assessee can be treated as assessee in default. For an example, you receive the demand notice from income tax department. You have not paid the demand in 30 days, you will be treated as assessee in default. Or suppose you are required to deduct the TDS. You have not deducted the TDS like Vodafone, you will be treated as assessee in default. So there are various cases where you can be treated as assessee in default, and if you treated as assessee in default, it means you are assessee. You got my point or not? Yes. So in simple word, can I say that what is the meaning of assessee? Person, there are 7 persons. What is the meaning of assessee? First, if any person is liable to pay any tax or any sum under income tax law, that is called assessee. Second, if you are not liable to pay any tax or sum, but you are like assessment proceeding is started, initiated for the assessing your income or any other person income, your losses or any other person losses, or some refund is due, in that case you will be treated as assessee. Or suppose if you are a deemed assessee under income tax, if in income tax it is written that you will be treated as deemed assessee. For trust, like trustee are treated as deemed assessee, then you will be treated as assessee. And last part, suppose if anywhere it is written that assessee in default, it means you will be treated as assessee. You got my point or not? Yes. Now next part, all people just pay attention. That is the last part for today, and I will just give you hints. You have to read this part at your home. Okay. Normally, whatever income you earn in previous year, that is going to be taxed in the assessment year. So whatever income you have earned in the previous year, that income is going to be taxable in the assessment year. Means assessment year you have to pay the return, you have to pay the taxes, you have to file the return. That is in assessment year. So previous year 2021, I will file the return in assessment year 22-23. I will pay the taxes in previous year 22-23. But guys, there are 5 cases in that assessing officer may charge the taxes, means you require to pay your whole taxes and you have to file the return in previous year itself. Means normally previous year income is taxable in assessment year. You have to pay the tax in assessment year. You have to assess your income in assessment year. But guys, there are 5 cases. In that cases, you have to pay tax in previous year itself. First case, there is a one section 172. And 172 says that it's very simple. I can take one example. Suppose there is a one ship from USA, and that company of the shipping company from based in the USA, that ship just came to the Chennai port and they just unload some goods, and after that they are loading some goods in the ship, and that ship suppose went from the port. Now we don't know about that. Is that ship will again come in the assessment year or not? In assessment year they will file their return or not? So obviously there is an uncertainty. There may be a tax evasion. Suppose that ship will never come back to the India and all. So what happened? There is a section 172, and section 172 says that if any non-resident is having the ship and he came to any Indian port, then before leaving the Indian port, before departuring from Indian port, they have to pay the tax. Now how to calculate tax and all, we will discuss in PGBP. In PGBP, this section 172, we will discuss whatever freight received by that particular ship, like captain or master of that ship will multiply that freight by 7.5%, and after that they have to calculate the tax and they have to pay to the Indian income tax department. Now guys, you know that there is an income tax department on port also. In Chennai port and Mumbai port, there is an income tax office. They will pay the tax instantly. There is a bank also. They will pay the tax, and after that only we will allow that ship to depart from the Indian port. So there is a section 172. So 172 says that if non-resident is having ship, they came to the India and they are loading some goods and all, and they are leaving, they have to pay the tax in India in the previous year itself, because we don't know that they will come back to India or not. That is one section 172. Now there is one more section 174. 174 says that a person leaving India, If assessing officer think that if any person he has an intention to leave India and he don't have any intention to come back again, means he is leaving India permanently, and assessing officer comes to know that, oh, like that Nirav Modi or Vijay Mallya is leaving India, he's not going to, his intention is not good, he's not going to come back to India, then he can charge whatever income earned in the previous year, he has to pay the tax in the previous year itself. That is section 174. Next is, suppose if any AOP BOI or any like AOP BOI or artificial juridical person, we form that AOP BOI for any particular task and that task is completed in the previous year itself. So if assessing officer wants, then he can charge the tax on that previous year itself. There is no need to wait till assessment year. He can ask you to file the return in that previous year only, and he can collect the tax in the previous year only. Same example, in Mumbai there is a Ganpati, and in Ganpati, Ganesh Chaturthi is very famous festival in Mumbai. So just we created one AOP BOI and we are saying that we will sell some flowers and we will sell some water bottle and laddus and all. We will do that. But after 14-15 days, we just close down that. So AOP BOI created for some particular reason, that task is completed. So assessing officer may ask us to pay the tax in previous year itself. Now one more point. Suppose if any person like he has intention to transfer the property to avoid the tax. He want to just transfer property. He is having one property and he just transferred to property and he has an intention not to pay tax in the assessment year. In that case also assessing officer has power that he can ask him to pay tax in the previous year itself. And last is a discontinued business. Suppose if any business, suppose I was running one business from last 10 years and in current year I discontinued that business. So I discontinued that business. If assessing officer want, then he can ask me to pay tax and assess income in previous year itself. There is no need to wait till the assessment year. You got my point or not? Yes, but it is all about the AO. It is all, that is the power of AO. If AO want, then only he can ask me to file the return in previous year itself or pay the tax in the previous year itself. You got my point or not? Yes. So everywhere it is written that if assessing officer want, then but in the first part it is mandatory section, but here in the like 2, 3, 4 part it is like, you know, that this in 2, 3, 4, 5 there is a discretion of the assessing officer. Now fourth point says that how he is transferring the asset to avoid the tax. Just pay attention. Person likely to transfer property to avoid tax during the current assessment year if it is appear to the AO, means if AO think that the person likely to charge or sell or transfer or dispose of or otherwise part with any of his asset to avoid payment of any liability under the act. The total income of such person for the period from the expiry of previous year to the date, then the AO commence proceeding under the section and chargeable to tax in that assessment year only. What happens? Suppose for an example, suppose Vijay Mallya came to India. There are lots of outstanding liability. Now he is having one asset. Now what happened? Suppose Mumbai, there is a one like Mallya house. There is a Kingfisher house in the Mumbai. Today he sold the Kingfisher house. Now he sold the today Kingfisher house. He has to pay the capital gain in the assessment year. But we know that he is not going to pay the tax. He just transferring asset to avoid the tax liability and he is not going to discharge that tax payment. In that case, assessing officer can ask that in previous year at the time of selling only. At the time of sale the property, assessing officer can ask that you have to pay the tax. You got my point or not? Yes. So basically you are transferring. What happened? One more example I can take. Suppose like I am having one property. Now I am going to be insolvent after some time. So what I will do, you know, that I will just dispose of my asset and all. So if I am disposing of my asset and I know that assessing officer think that I don't have any intention to pay the tax because I will be insolvent after some time. So in that case, at the time of transfer only, assessing officer can ask you to pay the tax in previous year itself. You got my point or not? Yes. So guys, this is the completion of today's lecture. Tomorrow we will start with the tax rate for assessment year 22-23. So thanks a lot people. That's enough for today from my side. Now your revision is only you have to read this part. Today was the introduction lecture. We just discussed about what is income tax act, source of income tax law, how Finance Act is passed in the Parliament and all. What is the section? After that, we discuss why government charge the tax and all. Like after that, we have discussed that what is the meaning of Income Tax Act, Finance Act, circular notification, as well as Supreme Court judgment, High Court judgment, and some basic definition, assessment year, previous year, charging section, person, as well as the assessee. And there are 5 cases. In those cases, you have to pay the tax in previous year itself, means current assessment year itself. There is no need to wait for the assessment year. You got my point or not? Yes. So thanks a lot, people. That's enough for today from my side. See you tomorrow. Just you have to revise this part. From tomorrow we will start with calculation of the tax liability, how tax liability is calculated, what is the tax rate for individual, HUF, company, partnership firm, AOPBI, marginal relief, and all that, 12,500 ka rebate and all that, everything we will discuss from tomorrow. So thanks a lot, people. That's enough for today from my side.